Hello, everyone. My name is Mike Douglas, and I'm the chair of the Beverly Hills Bar Association's Ethics and Legal Malpractice section. I'm delighted to introduce our speakers, Gary Kraus, Mario Massoud, and Jenna Nguyen. Gary Kraus is a partner at Gersey Schneider and head of the firm's accounting and auditing department, bringing over 2 decades of experience providing auditing, accounting, forensic, and consulting services to middle market businesses and nonprofit organizations throughout Southern California. Gary is a recognized leader in his field, and he serves as chair of the Cal CPA Accounting Principles and Auditing Standards Technical Committee. He teaches at UCLA Extension, and he is credentialed as a certified in financial forensics professional by the American Institute of Certified Public Accountants. He has extensive experience as an expert witness in federal and state courts. He also holds a bachelor's in arts in economics from UC San Diego and a master of accounting degree from USC. Prior to joining Gersey Schneider, he served as an audit senior manager and national insurance instructor at a Big Four accounting firm. Mario Massoud is an audit manager at Gersey Schneider with over 6 years of experience serving a diverse range of clients among financial services, manufacturing, medical care, and the not-for-profit sectors, including private foundations. He holds a bachelor's degree in accounting from the American University in Cairo and an MBA with a concentration in finance from the University of San Diego. He's a licensed CPA and an active member of the California Society of Certified Public Accountants. Originally from Cairo, Egypt, Mario brings a global perspective to his work and is known for navigating complex audit landscapes with integrity and a commitment to excellence. Jenna Nguyen is an audit supervisor at Gersey Schneider who has experience in audit, assurance, and forensic accounting across a wide range of industries. With a background spanning both public accounting and corporate finance, she offers a well-rounded perspective that strengthens her work in financial reporting and forensic analysis. Jenna's career reflects a strong commitment to the accounting profession and a dedication to delivering accurate, reliable results for her clients. And now I'd like to welcome our speakers, and let's get started.
Thank you, Michael. Thank you, Michael. Thank you for the warm introduction. We are very excited to be here. Our firm was one of the first firms to work with the state bar to help develop the pilot program. Back in 2023, the Supreme Court passed rules requiring the state bar to develop an audit program. And the state bar came to the Cal CPA Accounting and Auditing Technical Committee to help develop, what does an audit program look like? What is the framework for developing an audit program? And so our firm and 3 other firms worked hand in hand with the state bar to help kind of put together the CPA framework of the accounting program. And so that's how we sort of fell into this process. Doing that, we had the good fortune of working with them to help tailor best practices and procedures, think about risk assessment, and think about kind of the efficient ways that we could administer the program kind of in an efficient and effective way. And so in doing this, we have, and we bring, and 3 other firms bring the hindsight of having gone through the pilot program, which was really the kind of the crash test dummy of audits, which Mario will talk about. And then we recently completed about 32 of the first round of CTAPP audits. So Jenna, Mario, myself, and 5 other people at our firm sort of live and breathe the CTAPP audit program. With that, we're going to go through an outline of materials that we put together to talk about what is the CTAPP program and how it came about, understanding the rules, talking about who's subject to the review, starting to think about how to prepare for a review, the differences between voluntary and mandatory reviews, some of the outcomes that come from the audit process, We'll talk about the costs and what are the factors that affect how much these cost, how to make it easier for everybody. And then we have some feedback and experiences from some of the law firms that we worked with to kind of share some of the benefits of going through the CTAP program. The one thing kind of overarching that's different now with the CTAP program, and I can't speak for the Bar Association, but one of the goals is to put together a very proactive way in which the state bar monitors client trust account compliance procedures, meaning elevating the profession, teaching law firms how to keep books that are compliant with the rules, putting together some periodic check-ins from time to time, and then also um, providing best practices. One of the things that they found under the reactive approach is most of their work was complaint driven or kind of a regulatory burden. Our goal in this is to try to make the process smoother and provide a much more educational and worthwhile experience for the firms that get selected to go through the process. With that, Mario, do you want to go through the
Yep,
rules? Yeah.
of course. So now we're gonna take a deep dive into the program. Just for short, we're gonna call it CTAP, which stands for Client Trust Account Protection Program. So to understand CTAP, it helps to understand why it was created. Um, we have a lot of info on these slides, so the goal is just to give you a higher level understanding. And this presentation and these materials will be shared with you so you can review them more in detail on your own. So the program was officially established under California Rule of Court 9.8.5, and it became effective about 3 years ago, January 1st, 2023, after approval by the California Supreme Court. So the rule was largely developed in response to major attorney trust account scandals in California, as I'm sure you're all aware of, and these scandals, they exposed the weaknesses in oversight of attorney trust accounts and the state bar's ability to identify issues early enough to prevent client harm. So as a result, the state bar adopted, as Gary mentioned, a more proactive framework involving annual reporting, compliance certifications, and these CPA administered reviews. Um, the broader goals of the state bar are protecting the public, improving attorney trust accounting practices, enhancing attorney supervision, identifying deficiencies early, and just reducing the risk of misappropriation of client funds in trust accounts. Next. So an important thing to understand is that these applicable rules and requirements, they come from multiple authorities. So again, we're just going to go quickly high level through these. You're going to have access to all of these. So some rules, they were adopted directly by the California Supreme Court. Others were implemented by the state bar under the authority granted by the California Supreme Court. And then some obligations come from California statutory law, mainly that last one there, the Business and Professions Code. Again, we'll quickly go over these on a high level. So the first one, Rule 9.8.5 of the California Rules of Court was approved by the California Supreme Court, and it formally created the CTAP program. Rules 2.5 and 2.6, these were adopted by the State Bar of California pursuant to the authority granted by the California Supreme Court. And these rules, they govern annual reporting requirements, compliance reviews, and investigative procedures. Rule 1.15, this is the big one. This was approved also by the California Supreme Court. And this established the ethical duties involving safeguarding client funds, reconciliations, attorney supervision, and basically just trust account record keeping in general. And again, this is the big one because it comes to trust accounting, and we'll discuss this rule in detail a little later. And then finally, the Business and Professions Code. This is a California statutory law, and this addresses confidentiality protections for records produced during CTAPP reviews. We've had several instances where records produced by attorneys during the CTAPP reviews that we've conducted were redacted. And this rule states that production of these records during the CTAPP review does not waive attorney-client privilege or any confidentiality obligations. So before we dive into the CTAPP review process itself, a key question attorneys often ask is whether CTAPP applies to them and whether they could be selected for a compliance review. So at a high level, CTAPP applies to California attorneys who are responsible for client trust accounts or who handle client funds or property in a way that triggers trust accounting obligations. So this includes attorneys who are solo practitioners, small firms, and larger firms. There's a rule, it's not up on this slide, but there's a rule here that if the attorney has $150,000 in revenue or less during the reporting year, then the review will be conducted directly by State Bar accounting employees and not by one of the CPA firms that are approved by the State Bar. And in that case, there will be no cost to the attorney. So I just wanted to mention that real quick.
Also nonprofit, like law firms that are nonprofit organizations. The same with
Correct.
that. Yeah.
Yep. An important point is that the obligation is not just limited to the person who physically performs the trust account bookkeeping. If an attorney is the designated licensee, has responsibility for the trust account or supervises others that handle client funds, that attorney can still have CTAPP responsibilities. So again, practical takeaway is this: if your practice receives, holds, or distributes client funds, you should assume the State Bar may expect you to maintain compliant trust accounting records and just be prepared to support those records if you do get selected for a review. There are a couple of exceptions to attorneys being selected for a compliance review, and those are the four that are listed there on the slide. And these are if an attorney who is on inactive status during the reporting period, an attorney who's not entitled to practice law for whatever reason, certain attorneys practicing in California under multi-jurisdictional practice rules, and then finally, and obviously, attorneys who do not receive, maintain, or distribute any client funds. So this slide gives you a high-level overview of the compliance review process from start to finish. So the process typically begins with the attorney being selected for review by the State Bar. The State Bar will send you a notice, and then it issues a notice requesting records and your selection of a CPA firm to conduct the review. The State Bar typically gives you about 30 days to respond to that first records request and your selection of a CPA firm. Again, as I mentioned before, if revenue is $150,000 or less for the reporting period, then the review will be conducted directly by State Bar employed accountants, not by an outside CPA firm. Once the engagement is assigned to a CPA firm, the CPA firm will then schedule a meeting with the designated attorney of the trust account and the person responsible for the day-to-day bookkeeping of the trust account, such as an internal or external accountant or bookkeeper. For some of the solo practitioners that we've worked with, the attorney is basically the one that handles the bookkeeping themselves. So then, in that case, there would just be the one interview.
Yeah.
Yep.
There's a Q&A question on this very topic, Mario. There's a question of what happens when the CTAPP accounting compliance is overseen by a finance department, meaning somebody other than the attorney, who are not attorneys. Do you want to answer that, or do you want me to answer that?
You feel free to answer any.
Okay. The designated attorney is ultimately the person who's responsible for overseeing all of the accounting. This has been beaten into us 100 times.
Right.
The designated attorney has to oversee the finance department, the outsourced accountant, the employees who are doing the CTAP accounting, because the responsibility still resides with the designated attorney. With that, as part of the CTAP audit program, we work with the finance department, designated accountant, et cetera. But you can't absolve your responsibility for accounting oversight. Even if you could barely spell the word accounting, you still have the responsibility to oversee the trust accounting, even if you're not involved in the accounting process. So you have to, what the state bar beats this into us is that you have to have mechanism of procedures to oversee the accounting because your clients' trust funds are your responsibility. So you have to be responsible for what your accounting or finance department or accountant or outsourced person is doing.
Right.
That's kind of the question.
Yeah.
Uh,
That was
mul
actually, yeah.
yeah, there's
I
a
was
mul
gonna,
do you want to go through all the questions? There's three of them.
okay, go ahead. Yeah.
Multi-jurisdictional attorneys. Our understanding is that if you're California licensed and have a California trust account, you're subject to the review. Is that, Mari, is that correct?
Yep.
Yeah. And in qualifying revenue determined by the state bar, gross receipts, so dollars into your bank account.
Yep. All right.
Yeah, questions are
So,
cleared.
yep.
Yeah.
So continuing, and on the process flow, we talked about how once the interviews are complete, the CPA firm will then send the attorney a second records request list. And once the attorney provides the requested documents, there may be follow-up questions or requests. So the second records request list is the bulk of our testing procedures as a CPA firm that we perform because this includes our client selections and it includes like all the associated documentation related to those clients. So this is like the bulk of our testing. Once that's complete, a report with a list of findings will then be shared by the CPA firm to the attorney for their review. And then once the attorney reviews the list, once they review the list of findings, they will then sign a letter or statement of representations, and the CPA firm will then issue a final report to the attorney, which includes the reviewed findings list. At that point, the CPA firm's involvement in the process is complete, and then we hand off the file to the state bar. The state bar then meets with the attorney probably like a week or two after the CPA firm hands off the file to the state bar. And the state bar meets with the attorney to review those findings, and then they determine the ultimate outcome of the review process. We'll go over the different outcomes of the compliance review in a later slide.
Yeah. I'll answer Scott's question. Scott raised the question in the Q&A. Who
Right.
decides which CPA firms make it on the list of state bar or CPAs and what are the qualifications? I had to go through this process. So a couple of things. One, you have to be a California CPA firm and you have to have the work performed by employees who are local to California. So none of the work that we do is outsourced anywhere other than people who have roots in Nexus in California. You have to be a nationally recognized peer-reviewed CPA firm. So that's a status of we're an inspected firm. And you have to agree to all of the ethical principles and everything. There's all the contracting requirements for working with the state bar. So you have to be local people, not outsourced, and you have to be nationally recognized stature for having been reviewed as a CPA firm. And then you have to go through the screening process. Okay.
Um, so preparing for a compliance review, this is really the operational core of the presentation because most compliance issues stem from the day-to-day trust accounting practices. So there are several, I mentioned this earlier, we're going to dive a little deeper into Rule 1.15. So there are several requirements under this rule. And the first one is safekeeping client funds, which state that client funds must be held in a trust account and kept separate from operating funds. So attorneys, they can't commingle personal or firm funds with client funds except for just limited amounts needed to cover for bank charges in the trust account. Um, the rule also states that funds should only be withdrawn from the trust account only when they are earned, meaning the attorney has already performed the legal services to the client. Um, timing requirement that's also extremely important. Attorneys are required to notify clients in writing within 14 days when funds are received on their behalf. An example of this would be if settlement funds are received by the law firm on behalf of a client. And these funds, they generally must be distributed within 45 days of receipt unless there's a valid reason to delay distribution. An example of a valid reason could be that the attorney is negotiating lower medical liens in a personal injury case. So this would constitute a valid reason to delay distributions until the negotiation is over. Moving on to the record keeping requirements, also equally important. Attorneys must maintain trust account journals, individual client ledgers for each client, bank statements, and perform monthly three-way reconciliations between these three sets of records. Attorneys must also ensure that there's supporting documentation of all the ins and outs of the funds in client trust accounts. I want to emphasize the phrase three-way reconciliation because this was actually one of the most common findings we've seen during reviews where these reconciliations were not even performed. At the end of the presentation, we have a list of resources which includes examples of all these types of records and how to perform the three-way reconciliations. So again, we don't want to go into too much, technical accounting heavy detail during the presentation itself, but we do have the resources to help, and then we can also be a resource to you.
Yeah. There's a question in the Q&A from William. Primarily a flat fee immigration service, clients generally pay USCIS fees directly to the government, and we do not hold filing fee funds. For attorney fees, since we use a flat fee arrangement, may we deposit the flat fees into the operating account instead of the trust account? The question is whether the fees are earned when received. So there are firms that receive a quote unquote retainer, but the retainer is their fee. If the retainer is your fee, then you don't need to put it into the trust account. But if the flat fee has to be earned over time and it goes back to what's in the terms of your engagement letter, then you need to put it into the trust account. It has to do with when is the fee earned? And if it's earned upon receipt, then no, but if it's earned over time, then yes.
Yep, exactly. That's the key word, whether it's earned. If it's earned, it can
Earned
go
when
directly
received,
to
yeah.
your operating account. If it hasn't been earned yet and you still need to provide services, then it goes into your trust account first. Okay, so continuing preparing for a CTAPP compliance review. Again, these are requirements under Rule 1.15. In addition to maintaining accurate records, attorneys must also retain those records properly. So the rule for the state bar is trust accounting records generally need to be maintained for at least 5 years after final distribution of funds from the trust account. Another major area of focus is supervision. This is one that Gary already talked about because, again, this was another area that had common findings among attorneys during our reviews. So rules 5.1 and 5.3, they make it clear that attorneys remain responsible for trust account compliance even when bookkeeping functions such as a finance department are, these bookkeeping functions are delegated to staff or outside providers. So we often hear attorneys say that their office manager or bookkeeper handles the trust account, but delegation does not eliminate responsibility. So the designated attorney on the trust account still needs to review the monthly reconciliations, oversee procedures, and just ensure compliance of their trust accounts. And the state bar is increasingly focused on whether firms have documented policies, regular oversight, and staff training related to trust accounting. Again, this issue we've seen mostly with the larger firms, firms that have like thousands of attorneys and thousands of clients. So the attorney usually doesn't have any idea of the trust account or trust accounting process in general, but the state bar rules, they tell you that you still need to review, you still need to be in compliant. There has to be attorney supervision for every trust
Right.
account.
Yeah, it's like a top 10 national firm has trust accounts in 20, 30 states. They designate the Los Angeles office managing partner as the designated attorney. The Los Angeles office managing partner can't even, I mean, he can't spell trust account. He doesn't know the inner workings of how the debits and credits work through the accounting system. That is therein is the issue.
Right.
Yeah.
Right.
Next, we're going to talk about the CTAP pilot program. So, in the summer of 2025, the State Bar launched the CTAP pilot program and invited law firms to apply to voluntarily participate in the compliance reviews of their client trust records. And so, with that, 300 firms ended up applying, and 21 firms across different sectors and different firm sizes were selected. And of those 21, 18 actually successfully completed the process. And Gersey Schneider was one of the 4 firms at the time that played a key role in developing those audit procedures for the program. And from the pilot program, there were several common deficiencies and operational challenges that were identified. We will go over that in the next slide. So on the screen, you can see that the top 3 common findings from the pilot program were non-compliant trust account journal, non-compliant client ledger, and then non-compliant monthly three-way reconciliation, which you'll never hear the end of. The first being non-compliant trust account journal. So it was often missing requirements such as running balance, and then also missing the client information, which is used for our sampling selection, so very important, but also important for our attorneys to make sure that their client balances are correctly stated and accurate at any point in time. And then non-compliant client ledgers. So oftentimes those are missing the pay or payee information or descriptions. So it was just not clear as to what that transaction was for. And then also the non-compliant monthly three-way reconciliations. So oftentimes we saw that the trust account journal was just reconciled against the bank statement, but under Rule 1.15, a proper three-way reconciliation includes a reconciliation of the client ledger to the trust account journal, and then from the trust account journal to the bank statements. So the overall key takeaway from the compliance reviews during the pilot program was that it wasn't just about avoiding theft and misconduct, but also maintaining accurate and transparent records.
Do you want to answer? There's a Q&A question. Jenna or
what is
Mario?
it?
Yeah.
Other
And repeat the question.
So other than registering the account with the State Bar, what are best practices for non-IOLTA accounts holding client funds? Same as IOLTA accounts or anything special, for example, when holding large. So it's typically the same as IOLTA accounts. There are the same rules, the 1.15 that we talked about. It applies to both IOLTA and non-IOLTA accounts. Typically, non-IOLTA accounts, those are for your larger clients where you keep the money in for longer periods, and the interest that's being accrued for in these accounts are for the benefit of the client. And this makes sense if, again, like you said, it makes sense for funds that are being held for longer periods of time for whatever the reason is, but there has to be a specific reason. An example of that we've seen is basically funds that are being held for a transaction closing or a large real estate or business deal. So best practice there is often to use that separate non-IOLTA account for your larger accounts.
Yeah.
You want to add anything or?
No, that's it. The interest issues. The thing that we get flagged is the interest issue, and are you offering interest to the clients for holding the money? I suspect you are because it's in a non-IOLTA account, which is why it's in a non-IOLTA account.
Right.
And just making sure that the terms of the engagement letter are aligned with what your practices are. So if you're allowed to hold it, you can hold it.
Right.
There's another question from Sanford about being a mediator, and a mediator receives advanced mediation fees, does that need to be put into an IOLTA account? I'm not sure about the answer to the question because I don't know if being a mediator falls under the practicing of law or if you're providing that as a third-party service. So that would be my question one. We can get that question answer to that question from the state bar, meaning does it relate to practicing law? And then the default is what are the terms, when is the fee earned? Meaning is it like non-refundable and earned upon receipt? Or do you have to actually provide work and bill by the hour and charge against the fee? But my question is that considered practicing law? And
Yeah.
I can get I don't know the answer to that question, so we can
So
get an answer.
actually, one of my selections, so for one of the law firms I audited or did the performance compliance review over, one of my selections was actually a mediator who worked at the law firm. And so I think when I talked to State Bar, my understanding was yes, the money still goes into an IOLTA account. So it just depends, again, like Gary said, if the fees were earned or not at that point in time.
Right. Mostly because the fee has not been earned yet when you first receive the fee for a mediation that's going to take place in a couple weeks. So I'm leaning more towards yes into the trust account because it's considered like a retainer. So you haven't performed the services yet, hasn't been earned yet. So it would make sense if it goes into the trust account. That's always like the safest answer.
Yeah, but
Um,
I'll make a note to get
but yeah,
I'll make a note to get an answer for that.
right. Edward is asking, since clients send retainers into the trust account, is it necessary to acknowledge receipt of those funds? Usually, yes. That's like one of like the supporting documentation that you would have to support the money coming into the trust account. Um, What is the best way to document that a lawyer has performed? We have we have a template there's a state bar template that we can share with you. We have like a 3 slides at the very end of the presentation with resources. One of them is how to perform three-way reconciliations, and there is a template that the state bar has on the website. So we will be sharing the link with you at the end of the presentation so you can see what it looks like. Okay, Jenna, go ahead.
So in the last quarter of 2025, the State Bar selected 100 attorneys for the mandatory compliance reviews. And of the 100 that were selected, 14 of the reviews were actually performed by the State Bar because, as Mario has talked about, due to the low revenue exemption of $150,000 per reporting year, they fell under that threshold. And so that's why it was performed by the State Bar themselves. And then of the remaining 86 selections, Guernsey performed 32 of those compliance reviews, and that provided a significant practical exposure to the process and procedures, and also issues that firms have commonly encountered. Currently, the State Bar is still wrapping up those reviews, and the results from those reviews will come at a later time. And to provide a bit more insight into the mandatory compliance review, there's about 61 plus procedures required. But currently the State Bar and those are dependent on the sample selections. Currently, the State Bar is looking at the sampling methodology and may lower the maximum selections. So this also may lower the required procedures.
We have 2 quick questions I can answer. So Naomi is asking, I believe our practice management software, Clio, generates CTAPP reports and integrates with our accounting system. What should we do other than reviewing these reports monthly? So that's actually like a great starting point, but just one important thing is we've seen during reviews is that just having the software alone does not like create compliance. The state bar will still expect like attorneys to actively supervise and understand the process, meaning you still need to ensure that the three-way reconciliation is actually completed, reviewing like any exception items, whether like clients have like negative balance, unclear transactions or anything like that. So there still has to be oversight on the process, not just the report that the software provides. Scott's asking, can funds from different clients be deposited into the same single firm IOLTA bank account, or must the firm open separate client trust account? So if your what we've seen is that if your clients don't have if there isn't it's two things to look at. Number one, how much money is there related to each client, and then number two, how long that those funds are sitting in the trust account. Again, if it's a client, if it's one of your larger clients that have like money, like the trust account has millions in the trust account and it's sitting there accruing interest, then it makes sense to open a separate non-IOLTA trust account, because in a non-IOLTA trust account, the interest that accrues is for the benefit of the client. But if you have a bunch of like smaller clients, like in the thousands of dollars, or even if it's like if you receive, for example, a $2 million settlement on your client's behalf, but you distribute those funds within a month, two, three at the most, then it makes sense to keep them all in one IOLTA account. You don't need to open a separate IOLTA account for every single one of your clients.
Yeah, the secret though is to make sure if you have that three-way reconciliation in that account, you know how much of that money relates to each one of your clients. That's the thing that gets people, is getting
Right.
that reconciliation done. So that's it.
Going to move on to the common findings that we found under the CTAPP mandatory program. So similar to what we saw in the pilot program, we continue to see issues with incomplete account journals and client ledgers. So in many cases, key details such as running balance, transaction descriptions, client information were all missing from the client ledger or the account journal. And then again, the three-way reconciliations were also a recurring issue. During the mandatory reviews, a few additional findings came up as well. One example is around rate increases. So while many firms had in their fee agreement that rates are subject to increases every January 1st, this isn't sufficient because those rate increases need to be communicated to the client in writing. Another finding that we've been talking about is we saw a lack of oversight over client trust records. So in several cases, the designated attorney wasn't fully aware of policies and procedures surrounding client trust record keeping, and they weren't consistently reviewing the monthly reconciliations. Move on to more findings under the mandatory program. Next, we identified several calculation errors when we were doing our review as well. So for instance, firms were calculating their fees using net proceeds rather than gross proceeds. So this resulted in the firms under allocating fees owed to themselves. So as a result, those funds remained in the trust account journal or bank account longer than appropriate, which created a commingling between firm funds and client funds within the IOLTA account. We also saw another recurring commingling issue, which was related to client retainers. So in several instances, retainers were first deposited in the operating account and then later transferred into the IOLTA account instead of being deposited directly into the trust account from the beginning. And then another issue was that we noted that a number of stale checks remaining on the reconciliations without timely follow-up by the law firms. So those checks were left outstanding for extended periods. Firms are now having to go through the state bar sheetment process to handle those unclaimed funds. So key takeaway.
Jenna, speak a little louder. There was a comment about speaking up.
Oh, sorry.
Yeah.
Overall, the key takeaway is that the trust accounting compliance really depends on having strong procedures, consistent oversight, and clear documentation and process. And then I'm going to move on to this page, which is the 3 types of findings that can arise from our testing.
This is what our report looks like. So this is just an excerpt of the 62 procedures. And so what is the procedure name? What is the procedure? And if and when you sign up, you will have all the procedures laid out in front of you. But then our report back to you and back to the state bar looks like this, where it's the procedure, what we're supposed to do, and what the findings were. So if you're wondering what this is kind of the product of our work. Okay,
Right.
sorry. Yeah.
So there's three different descriptions of findings. So the first one is being no exceptions were found as a result of applying the procedure. So this is meaning that we didn't find any discrepancy after reviewing the provided documentation, which is good. The next is an actual finding. So after reviewing the provided documents, we found some kind of discrepancy, and so we're just noting that. In this case, it was related to the client ledgers missing the payor information. So that's what this is describing. And then lastly, down here, we have the non-applicable. So this is when a certain procedure is not applicable to law firm. And this is just due to maybe the way that they handle receipts and disbursements. So in this case, the law firm didn't have any cash transactions. So it was marked not applicable.
We have a question. Michael's asking, what if a client remits a retainer payment to the general account instead of the IOLTA account? So again, here, just make sure that your clients have your trust account information. If they are remitting or sending you a retainer payment, just make sure that they have your trust account information and not your operating account, because what we've seen a lot of examples of this where the retainer will go initially into the operating account and then the attorney will move it to the trust account like same day. So even though it gets transferred to the trust account same day, it will still be considered a finding because even for a day, it's considered like commingling under the state bar rules. So just make sure that your clients have your trust account information just to avoid that entirely.
All right, so here are some more examples of findings that we had from our testing. You can read about this a little bit more in depth on your own as you'll be getting the slide deck. So I'm going to move on to the next slide. So now we're going to talk about the four outcomes from a compliance review. So the first being confirmation of compliance with no further action. So that means that you completed the compliance review and there's no follow-up, no nothing that needs to be done on your part.
Yeah. For that first one, usually there could be some findings, but it could be like very minor corrective actions, meaning it's just recommendations moving forward. So basically, it means like you don't have any material issues.
Right. And then next would be the state bar issuing a mandatory corrective action if there's a bit more serious concerns. And
Yeah.
then
A mandatory corrective action. So say you weren't doing like we did the audit. We didn't find the three-way reconciliations. They just weren't being done. But during the audit process, everything sort of kind of checked out, but you weren't complying with the reconciliation process. The corrective action plan is they're going to say, hey, 3 months from now, give us the last 3 months of reconciliations. That's your corrective action plan. You fix it, you do it, and you move on. And it's a follow-up to a finding that they're enforcing, but it's really just at the state bar level. This doesn't go into enforcement at all. It's just, set a goal for 6 months, do the reconciliations, report back to us, show us you did it, and then they close the file. Okay, sorry.
And then after that is if it's more serious, if the state bar is more concerned, then they'll escalate the compliance review to an investigative audit. So this is under more scrutiny and it spans over the course of multiple years rather than 1 year, because the compliance review is typically just 1 year.
Yeah. Yeah,
Um,
and that too is still just done by the state bar. I mean,
right,
the folks that we work with, if we found, hey, look, there's like commingling, intentional or unintentional, we don't know, but just the records are just not auditable. They will pick up the file from us. They will then do their investigation further and then come up with either a corrective action plan or a referral. And then you want to talk about the fourth one.
yep. And then the last one, as Gary was pointing to, is a referral to the Office of the Chief Trial Counsel. So this is like the most serious degree, like if it could result in potential disciplinary action. So we're trying to avoid that one. All right, I'm gonna hand it off to Gary to talk about the expected costs.
It's a fortune. No, it's not a fortune. We went through the pilot program and we did 8, and then we went through the first round and did 32 of these. a lot of the costs are really driven by a few factors. So number one factor so things that we've learned, the state bar's procedures, the 62 procedures, some of which are not applicable just based on the type of law firm, that dictates all the work that we have to do. So we don't have discretion in not checking the names of the accounts to make sure that they're titled properly, or these are all procedure, checking the signature cards to make sure the designated attorney's on the signature card. They've specified all the work that we have to do. So the primary scope of the work is set by the state bar. With that said, what drives the cost? What drives the cost is like anything you do in your work, is how responsive are the clients to us? Meaning, if we send you um, uh, records request two, records request one will always come from the state bar. You will upload your initial submissions to them. They turn it over to us, to which we submit records request two. In a perfect world, records request two is complete, it's accurate, it has all the information we asked for, and it's properly organized. That's great. Sometimes records request two leads to records request three, four, five, and six, because there's just a lot of back and forth going on. And like your work, it's the same as our work. The more times the ball bounces back and forth with questions and incomplete information and redos, and this was wrong, let me resend it to you, that takes a lot of time for us. And again, we can't really control that too much. But then also what drives the process is the number of trust accounts, because the state bar dictates a minimum sample size by how many accounts you have and how many transactions that run in, how many clients and how many transactions run through an account. Then the type of cases. So your general fee for service, your general FFS cases, if you're an attorney and you're practicing some transactional work and it's just hourly billing against a retainer, those are generally pretty easy. The harder ones are the contingency cases where, you'll get a $2, $3, $5, $10 million settlement. We've had a class action firms, and that settlement's on behalf of 1,000 plaintiffs. There's lots of money, there's a lot of allocation to different clients, and then there's a lot of deductions and payouts and advances that have to be taken out, and that falls into our testing. So we found that contingency firms cost more than just your regular fee for service type firms, and then the record quality. And the more you review your information, the less work it is for us. It's a long way of saying, with that said, probably 90% of the work is going to fall into this like $10,000 to $15,000 range. 20 on the high end if you're a top 100 law firm and you've got thousands and thousands of transactions and many accounts. It might be a little bit more. And then we've had some sole practitioner and 1, 2, 3 partner firms where it's going to be under 10,000, just because it's like, it's pretty easy. Just kind of give us everything, we go through it pretty quickly. So, but kind of that 80 to 90% is going to fall into this 10 to 15, $10 to $20,000 range. So I hope that's a long-winded answer. I'm sure that triggered some questions here. I don't know if it did, but
The state bar is refining a lot of the whole process, and then with our experience, we know now like what to look for, what to focus on, the higher risk areas, the lower risk areas, and usually the state bar, as I mentioned like previously in the process flow, the state bar starts by sending the selected attorneys the initial records request list. So they have expanded that records request list so that the state bar does more of the initial work versus us doing it. So anything that the state bar does, you do not get billed for. So that's the goal, is trying to bring this the cost as low as possible, because we do know this was one of the concerns of attorneys when the CTAPP program first came out.
yeah. And the more efficient you are in helping us, the less the cost.
Right.
That's it. Okay. Positive attributes. Was this my slide or your slide?
Here's that.
Oh, my slide. Appreciate that. Yeah, so there are some positive attributes. When I started the presentation, I said our goal is to be proactive, and our goal is to elevate the profession in terms of how, do you understand the rules? Do you understand the best practices for keeping records? That's sort of been the outcome from the program. So attorneys are, I'm not going to use the word grateful, but we definitely help elevate the record keeping practices at the firms that we worked with. Some of the feedback that we received is now attorneys have a better understanding of the trust accounting rules and the compliance requirements. improved understanding of the three-way reconciliation and the monthly review requirements, identification and record keeping procedure weaknesses. So if we found that there were weaknesses, we brought it to your attention. Greater awareness, does the designated attorney now understand how accounting works in their firm? Better coordination between the attorney and the accountants and the non-designated attorney or the accounting function in the firm. Developing more systems of organization. The number one complaint that the state bar would get are customer client issues over fees. And a lot of times what the state bar told us is their time was spent dealing with answering client issues over fees with attorneys. And the reason for that is that the attorneys would never get back to the clients. Why? Because the attorneys didn't have good accounting records. And if you didn't have good accounting records and you didn't keep good reconciliations, you couldn't answer very well to your clients, what is the balance of your account? How much is left in my retainer, et cetera. And so then that would go to the state bar. Their goal is to take all of that, elevate the record keeping practices of the law firms so that now the attorneys are better equipped to handle issues with their clients through better accounting processes and procedures. That's the goal. Maybe idealistic, but the more they can push education and awareness down to the law firms about the subject, the less is going to go up to the firms about kind of the routine day-to-day stuff, the more time they have to go and look for other issues to regulate. So anyway, what's next? Okay.
So
These are the resources we
yeah,
have. Yeah.
just a quick question. Scott is saying, any insight into why there are only 10 approved CPAs? Was there a
I do.
Yeah.
You have to drink the Kool-Aid. And I say that in a good way because you have to go through all the hoops for getting appointed to do work for the state bar. You have to go through Mario, how many hours of training have we had to go through for this over the last year and a half?
Yeah, over
80
25. Yeah,
hours of
per year.
80 hours of training.
Mm.
You can't dabble in this, meaning you can't say, oh, I want to sign up and I want to do like 5 of these or 10 of these. You have to jump in with 2 feet. And so you got to find a firm that's not going to outsource the work locally. No AI, nothing gets shipped to the cloud anywhere. It's all done here locally. And you can't dabble in it. You can't just say, oh, I'm going to do 5 to 10 of these because it looks like something I can do. So you have to jump in with both feet. And it's hard to find CPA firms that want to do this. So there's 10 firms now. There was 4 a year ago, and now there's 10. So
Yeah, I was gonna say like the first mandatory round, there was, as we mentioned, there was like 100 law firms that were selected. So there were 4 CPA firms. This next round for the 2025 reporting year, I think they said there's going to be about 400 attorneys that are going to be selected. And then that's why they increased the number of CPA firms. So you're going to see that number increase as they are planning like every year. As we move on every year, they're going to increase the number of law firms that get this compliance review, and then they're going to increase the number of approved CPA firms.
yeah.
Okay, so the next 3 slides, again, not going to dive deep, but the next 3 slides, they basically summarized like the several important rules that we've already touched upon during the presentation. And these are resources that attorneys should continue reviewing after today's presentation. So again, we'll be sharing all of this, including the slides and the materials. There are links that will take you to the details of each rule. And there's also one of the links, it's the State Bar CTAPP training course. And they're really worth reviewing because they provide you with practical guidance and they just reinforce the expectations that attorneys should be following before they are ever selected for a review. So just being proactive, not just waiting until you get selected for a review. If we go to I think the last slide, that's
And I
okay.
just answered William's question in the chat.
Okay. So that kind of concludes our presentation. We understand most attorneys probably didn't get into law school because they were, passionate about three-way
Accounting.
trust accounting reconciliations. But hopefully, like today's presentation just made the process in your minds just a little less daunting, just giving you that practical insight into like how CTAPP reviews operate, the types of findings that we've already identified in the pilot and the mandatory programs, and the steps that you can take just to strengthen compliance before any issues arise. So again, biggest takeaway is that most findings or problems that we observed during the program were not intentional misconduct issues. They were more often just like weak procedures, inconsistent reconciliations, inadequate attorney supervision, or just documentation gaps. So not intentional misconduct issues. So we are available to you all as a resource if you have any questions or concerns regarding the CTAP process. Again, we've participated in 35 of these compliance reviews, so we know our way around the review process. So if your firm is ever selected for a CTAP compliance review, we would be happy to assist you and just help make the process as smooth and efficient as possible. And then again, just early preparation, organized records, just being proactive will significantly reduce the burden and just the cost of these of the review. So please, again, don't wait till you're selected. Take a proactive approach, and then just to ensure that you're following the applicable rules. Uh, One last thing that I'll mention is that we did several of the attorneys that we've worked with have external bookkeepers that are very knowledgeable about the state bar rules, and those were some of the attorneys that had the like minimal number of findings. So if you need anything, we would be happy to provide you with recommendations to those external bookkeepers. Our contact information is on the last slide, so please feel free to reach out to us at any time. And yeah, thank you all for having us, and thank you to the Beverly Hills Bar Association.
This concludes
you.
today's presentation. Thank you so much, everyone, for a fantastic presentation, and thank you so much to our audience. Have a great day, everyone.
Thank you.
Thank you so much.